Okay, so we had a look at the materiality calculation, and now it's time to move on to the FSA worksheet, which is by far the most crucial, the most important document of our product. And maybe it's now also good to show you the dashboard again. So basically what we've done, we went through the client acceptance, we've done the materiality calculation, and now we're here at the FSA worksheet. And again, so you can choose to navigate through the dashboard or use the document manager. Since we're now at the dashboard, let me just click that, and then it will also take me into my FSA worksheet. And okay, let me just show you this in full screen. Now, just give me 1 second to change the view a little bit, and that's also maybe a good learning thing, that by switching on this ruler you can change the width of your columns so that everything fits on the screen nicely. And I'm now just collapsing all my assertion rows. Okay, that's a good start. So I have imported a trial balance. I've mapped my trial balance, and based on the either mappings or lead sheet codes, those accounts are now grouped into financial statement lines, and that's what you see here in this document. To start with this column, final balance, it's very similar to what I just explained in the materiality calculation. The final balance will always show me the actual balance of the work in papers working trial balance. So if you post adjusting journal entries, if you, for example, receive multiple versions of the trial balance from your client, and you import or re-import those into working papers, your final balance will always be calculated real time. There will be the balance how it is right now in working papers. And to indicate, or well, if you want to analyze that, you can just double click the amount, and it will show you that these accounts, well, that's only one account, let me pick the other one. These accounts, the inventory that we just mapped, together are 156,000, and that is the amount that's actually shown here in the FSA. So I think that's quite useful, quite easy. If we now want to do the materiality assessment, we don't necessarily want to do that on the final balance, but on the planning balance. And it's kind of similar to what I just mentioned in the materiality calculation. Let's say it is, well, it's the beginning of November, and right now we're doing our planning for our year-end audit work that is early 2014. I want to show in my engagement file that based on the data that I had right now at this date, I made my materiality assessment. So in order to do that, I can hit this refresh button. Yep, okay. And by doing so, my final balances that are now in my working trial balance will be copied over into this column planning balance, and it will also say this is the planning balance as of November 6th. So this is the date that I've taken this snapshot of my balances, and this planning balance will not ever change again until I hit this refresh button. So it will always show in your engagement file, based on these balances, materiality decisions have been made. Whereas your final balance will continue to change, evolve based on adjusting journal entries, or if you re-import a new trial balance. Okay, if the change in the trial balance is so big that you want to redo your planning, then you just hit the refresh, and again it will set a new planning balance. But I think that's how you want this to work. So your planning balance is frozen, is a snapshot. Now moving on to the materiality, what's important to mention is that here at the top of this document, and that basically goes for all documents that are part of the Audit International template, it shows me the materiality. So it gives me my preliminary and final materiality, and then the overall materiality and the performance materiality. So that's available for your team members, for your users, so they can always see what is the materiality for this particular client. Okay, now well, these amounts are clearly bigger than the materiality, so I don't think that's too much of an issue. But if we go into prepayments, that's a specific situation. It's 12,000, my planning balance, which is smaller than my performance or overall materiality, but it's still marked as material in this column, materiality assessment. And now I can expand my line prepayments, and then it shows me that we have set a adjusted performance materiality of 5,000 for this particular line, and because of that my prepayments are now material. Of course, we can only do a calculation based on the amounts, which is only half of why something can be material, but that's what the software can do for you. The other thing, whether or not if it's a high risk area or if there's a lot of cash transactions, even though the balance might be smaller, that's the professional judgment that you have to do as an accountant. And I'll get back to that right away. So let me just finish off this prepayments. If this is not so clear why this is material, you can hover over the checkbox here, and it will say it's material because of my performance materiality, preliminary and final. That might still not be enough detail. So in order to give me more information, I can switch on my materiality details, which is here. That will open up two more columns. Two for my overall materiality, preliminary and final, and two for my performance materiality. And as you can see here, the software now gives you feedback that your overall materiality is empty, it's not material, but based on your performance materiality, this is marked as material. And by hovering over this checkbox, I actually get a more detailed comparison. And in this tooltip, it now shows that 12,789 is larger than 5,000, which is my adjusted performance materiality. So this gives you more feedback why something was marked as material. If you don't want to see that, you can just go to your top row, do a right click and choose to not display materiality details. So we don't want to overwhelm the user by showing that all the time, so that's why it's hidden as a default. Okay. Now, going to that cash and cash equivalents, maybe the amount is smaller than my materiality, but it's a high risk area, or you know that there's a lot of cash transactions. Then as the user, sorry about that, you can just overrule the calculation that the FSA worksheet has made, and you can just say this is material. That will show you this bright red dot, which indicates that this is something that has been changed by the user. So as a reviewer, it's quite important to always look at the FSA lines that have red dots, because that's something that has been modified by the user. It works the other way around as well. I could say payables it's a large amount, but I don't think this is really material, and I can switch it off. Let's keep that, and I will show you what happens later on. If I want to go back to the calculated value, I can do a right click and then take away this overridden tick, which will go back to the calculated value here. Okay, so those are the first couple of columns in my FSA worksheet. So what my FSA worksheet does is that it summarizes my FSAs, it gives you the planning balance, and based on that planning balance and your materiality calculation, you now make your decisions which areas are material, which ones are not. When you've done that, there's another round of optimization that you can do in your file. So just by going to the optimizer confirmation report here, it will now process your materiality decisions from your FSA worksheet, and if I scroll a little bit further, it will now say, okay, these areas were not marked as material. Would you like me to delete these sections from your engagement file? Now, so we started out with a engagement file that's a one-to-one copy of the template, which has all documents in it. We chose a profile that already gives us a smaller starting point, but all my financial statement areas, my audit sections are still available in that file. Now that we know which areas are material, which ones are not, we can choose to let the optimizer delete all the non-material financial statement areas. So of course you don't have to use this, but you can use it, and then it will help you optimize or tailor your engagement file a lot faster. It does show you the balances here. So now you can see that, hold on, you're deleting a section cash or a section payables, and there are balances. So maybe that's not the right decision. Then you can just untick these boxes and it will not be deleted. If this is deleted, it's the same as with all the other documents. Your work programs, your lead sheets will still be available in a template. So even if you deleted them and that wasn't such a smart move, you can still decide to drag and drop them back into your engagement file from the template. So you will never really, it will never really be lost or gone. Okay, so I'm just going to click proceed with deletion. While it's doing that, I will show you my document manager here. Let's see if I can do that quickly enough. And you will see, or maybe I'm not fast enough. No, I think I was too slow, sorry about that. But now you will see that my audit sections are a lot less than the audit sections here in my template. So in this particular client, investment property, intangible assets were not relevant, so why should we keep that in our file? It's now deleted by the optimizer. So again, this makes your file more specific, easier to work with, etc. Okay, so that's the optimizer confirmation report. Let me just close that, and then we'll go back to the FSA. Now, the next two steps that we can do in the FSA first are the risk assessment, and then are the risk response. And I am currently only showing my overall risk. That's because I have the one form profile loaded. If I had, for example, the core profile or the tailor per engagement, the larger profiles, then it would also show me a column inherent risk and a column control risk. If you think that's relevant for your smaller audits, you can change the profile and switch those columns on in your smaller, in your one form profile at your firm level. That's all very flexible. How we expect you to work now is you would keep your FSA, let's say, as the summary document, and in order to complete your risk assessment, you would now go back to your one form, and you would go to the other areas. For example, understanding the entity and its environment. The process is very similar to what we did with the engagement acceptance. You can either choose to document this as a narrative here in these field text areas, or you can choose to drag and drop in the full understanding the entity form, and then use these references and complete the full form instead of the narrative. That's completely up to you. Let's say you've completed the understanding the entity here in the one form, and you came across something that you think is a risk and you want to document it. Now, that's where this button comes in, which is our new risk button. And there's a couple of ways how I can document risks. First of all, there's the manual one. I could import risks from any other file, or I can use Caseware risk space. I will show you the risk space integration when we get to the management letter points. Maybe now it's better to show you the import risks. Because this feature actually opens up a nice option. You could build a risk library for your firm by just creating a Caseware file, documenting or inserting any possible risks, and make that available to your users. And then your users can use that as a risk library, and they could just go through and see if there is risks in that library that are applicable for their engagement. So I now have I'm using my audit demo file as a example of a risk library. So you can see it has 16 risks in that file. And instead of manually documenting a risk, I'm now going to look at risks that are already available. I'm going to say, well, I think these risks are relevant for my engagement. select those three, and just by clicking OK, it will now copy over these risks into this engagement. So just by organizing that as a risk library, you can see that it's quite efficient, and it will really help your staff to properly identify risks. Now I've checked 3 risks, so this is the risk dialog for 1 risk, but actually because I've done multiple, I'm just gonna pick this one. And the other thing you can see here is that when I import risks, all my fields that I want to use or that were populated in the risk library or in the other file are copied over as well. So here I have the short description. This field is the long description. Here I can document what could go wrong. The audit response, which is maybe a quick note, like when you identify the risk, you might already know, like, okay, this is what we have to do within the audit. That's something you can document here in the audit response. Well, I don't think you want to draw your conclusion yet that the audit has properly addressed this risk, so that's something you could eliminate. And quite important is this one. So here I link my risk to a financial statement area. So by clicking that box, I get a list of all my financial statement areas. And if you compare this one to the same dialog that we saw in the materiality calculation, you can see it's a lot shorter now. Reason for that is that it now only shows me all the material financial statement areas. So we started out with a long list of financial statement areas in the FSA worksheet, but by selecting which ones are material, we make that list a lot shorter and more workable. So by picking receivables current here, I'm linking this risk, downturn in economy, to my receivables current. And after doing that, I can now also set a specific assertion that's really important for this risk. Then moving over to the right hand side here, what it shows me here is my overall risk assessment. Now this is because I'm in the one form profile, I only get this overall risk. If I were in a bigger profile, I would get a inherent risk and control risk and overall risk. So then you can break up the risk, and then you can show the inherent risk might be low, might be very high based on controls work or your control your evaluation of controls and maybe your control testing. You could say the control risk is low, therefore the overall risk is low. Because this is for a small audit, we really pare down the options that you have. There's lots more options that are available in this dialog, by the way, and we only give you the overall risk. So let's say that is high here. In this source, it shows me the document where this risk was identified. So it's the one form. Okay, sorry, no, this is copied over from the actual document where I imported from the actual file from which I imported this risk. So if I want to change it, I can just select my one form document here, and one form is now recorded as this is where this risk was identified, which I think is quite relevant for your audit documentation. The risk will be addressed in my work program 130-101, which I know is my work program for receivables. So and that's configured in the FSA, so that's automatically completed here. Okay, it's the one form profile, so again, not all the risk options that we can offer are available here, but I think this is a good set that you would use in a smaller engagement. So I'm just going to click OK, and that will store these 3 risks in my risk database within working papers. So that way I'm going to go through all these areas in my one form, and kind of in parallel I'm also completing my FSA. So let me go back to my FSA worksheets. Okay, there. So I've gone through my understanding the entity. There's an area on risk assessment, and as the overall result, I can now go into my FSA and say for my property, plant and equipment, for my inventory and for my, let's do receivables, I can set my overall risk. And if I want to, I can set that at the assertion level, and I can just set it as high, medium, low. Now I'm going to use low for my property, plant and equipment. I'm going to set my inventory risk as high, and receivables, let's set that to low as well. And maybe let me also change the assertion. Change the assertions that are relevant for inventories. Might not be technically correct, audit technically correct, but just to show you what happens if I remove some of these assertions. Okay, so that's the kind of thing that I would do in my FSA, and now your FSA becomes more of the summary of your risk assessment, and we go to the next part, which is the detailed audit response. And that's actually shown in these 4 columns here. So you can choose whether you want to do substantive procedures basic, substantive procedures extended, substantive analytical procedures, or test of controls. Now I think for a small audit this is not really that relevant, but I'm going to show you how it works anyway. So I can say here, well, the risk is low, so we're only going to do substantive basic procedures. Let's say the risk is high, so that means we're going to do a bit more procedures here. And then for my receivables, we're only going to do the basic procedures again. And okay, since we're in the FSA, this is how you complete the FSA. I think it's better to show you the direct link, how the FSA and the work programs work together. So from this property, plant and equipment, I now go to my working paper reference, my audit program 1.101, which is my work program for property, plant and equipment. And you will see that as I'm opening this work program, some processes are ran. You will see some progress bars. The tool is making all kinds of calculations. Yep, so now I'm in my property, plant and equipment work program. Yeah, I'll explain the interface a little bit later. What you can see here is that right now in this column, the overall risk assessment from the FSA is repeated. So it's there at the top of the audit program. We expect that, well, maybe that's for larger audits, someone else might be completing the FSA, and then the audit team only does the work in the work programs. So it's a bit more repetition, it's kind of communication. These were the decisions that were made in the FSA. Then here you can also see that the substantive basic procedures, that's the decision that we made as the audit response in the FSA. Only those are selected here. And then we can go to the audit procedures. Now, just to remind you, we're still in the planning stage of the audit, and we're looking at the work program from a tailoring point of view. How do we want to modify this in order to address the risk in the right way? Now, if I show you this option, Review Deleted Procedures, and I scroll through my audit program, you will see that these procedures are all shown in blue, which in case view terms means these are hidden or skipped or deleted. And it clearly says these are all deleted by Optimizer. And as I hover over these procedures, it also says this procedure is deleted because the risk level set in the FSA is actually low, and this procedure is only applicable if the risk is medium or high. So that is something that we have configured in our template to make it easier for you, to make it more efficient for you to tailor the work programs. So right now, if I scroll to the bottom, you will see that it's around 9 audit procedures for property, plant and equipment. I think the default is around 17, 18. So you can see that the optimizer is now helping you to efficiently tailor the audit program. If we go to, well, let's pick this one, the expert. You might remember that in the very first checklist we had one question: is an expert relevant? Do we need an auditor's expert in this engagement? We said no, and because of that this procedure is now also deleted. So that's how all of these optimizer features work together to help you easily, quickly tailor your audit program. Um, if you're not happy with the automation, we find it very important that you are always in charge. So it's only a suggestion. So let's say, well, additions, I still have additions in this particular client. I can just do a right click and choose to restore additions. You see it does some processing, and right now this procedure is no longer deleted. It's just there. If I, as a user, mark something as deleted or restored, that will always prevail over the automation done by the optimizer. So next time, even if I change the risk assessment, this procedure additions will always be available here. So that's one way how I can restore my procedures. The other thing I could do is I can also look at the content library. So if either manually or by optimizer a lot of procedures are deleted, they're not really permanently, well, they're deleted from the work program, but they're still available in the library. So it's kind of similar as what we do with the document library, where you have all your documents. This is on the procedure level, and now you have all these procedures available in your content library. And if I want to re-add those, I can just select a couple. I get a nice preview here, which I can make a little bit larger. I can see what the procedure is, tick it, click OK, and these will be added back into my work program. For now, I'm just going to click cancel. And if I switch off my review deleted procedures, they're just gone, and this would be the work program, how I pass it on to my audit team. Okay, this was one example. This is my property, plant and equipment, where I set the overall risk to low in my FSA worksheet, and because of that a lot of procedures are deleted because the risk is low. We don't have to do as much work. We don't have to do all the work that is in the default audit program. If I now go to inventory, I've done the opposite. I've set it to high. If I now click on the work program here, you will see that the optimizer is doing a similar process. It detects that the risk is high. So now, as a response to that, it also brings in procedures that are only optional, that were as optional in the library, and these will be in my audit program as well. Okay, there we go. We also see that we only selected 2 assertions as being relevant, as an example. And if I now scroll through my audit program and go to the to the bottom, you can see that under customized risk response procedures, my category B procedures, substantive procedures extended, have also been added to my audit program, and probably also C and D. So that's the impact of saying this is a high risk. Because it's a high risk, all the optional procedures that were only available in the library are now actually added to my audit program. We could have a quick look at my review deleted procedures, see if that's okay. So the other thing that I did is I made the assertion valuation not applicable for inventory. It's a bad example, I understand that, but this is just to show you that if an assertion is not applicable, if there are procedures that are only in the work program because of that assertion, those will be deleted automatically by the optimizer as well. So it really ties together I think in a very nice way, and it really helps you to make all these little customizations that you would otherwise do manually, and now the optimizer does it for you. If you are not happy with that, or if you don't like that approach, the optimizer can be switched off. You would have to go into the template settings, but then you can switch it off and it will not run.
Okay, so those were some examples. Now let's get into the final, which is my receivables. Go into the audit program for receivables, and I will use this as the example how to tailor my audit program in detail.